Today we shall have a session today about bank reconciliation. We are Jovima Digital Consultants. Now, bank reconciliation looks at two things. We look at the bank balances at the end of a particular period and the cash balances. And the cash balances here, we are interested in the cash book and the bank column specifically. We are interested in knowing how much was the bank balance at a particular period, at a particular date. For example, at 30th October, how much did we have in the bank? And how much did we have in the cash book using the bank column? Remember, this video is meant for those ones who do reconciliations manually. For those ones who reconcile automatically within their systems, we shall also have to look at how do we do that, especially with the QuickBooks. Now, with the reconciliation, we are going to look at things like the key factors to consider. For example, the major question here, or the major concern, is to know how do we reconcile. And if we are to answer such a question, we are supposed to know the key factors to consider when you are reconciling. One of the key factors to consider is the cash book balance. Another one is the directed credits, directed debits. We look at unpresented checks, uncredited checks, and the bank statement balance. When you are reconciling, we usually start with the adjusted cash book. Why? We have to first look at the errors, possible errors we could have done as accountants within the company, within the system. Remember, we have errors like errors of omission, we have errors like errors of commission, we have errors of principal, we have posting errors, we have arithmetic errors. All that is considered when we are reconciling. Remember, there are some errors which will be reflected by the trial balance, and there are those which won't be reflected, like errors of omission. If you omit a transaction totally, it will not be reflected anywhere. It will not even affect your trial balance. But remember, if this transaction went through the bank will have recorded this. So we start with adjusting the cash book for such errors. So we proceed. After getting the adjusted cash book, we come and look at the bank reconciliation statement. And to come up with the reconciliation statement, you must have an adjusted cash book balance. How do we adjust for cash book? We go to the cash book balance, the balances we have at a particular period, for example, 30th October, as I said. Then we add back. We are going to add back all the direct credits we had in that period. What are direct credits? These are transactions, or these are revenues, income received through the bank, but not recorded directly in the cash book. For example, if I receive interest on my account, if I have a savings account, and after every end of the month I receive some interest, this interest, I may not know how much did I receive last month, how much will I receive next month. So it means I can't easily estimate it and I automatically put it there. It has to first happen. It has to first be and then recorded. Therefore, I may receive this money in the bank, but not recorded in my cash book, because I don't know how much this money is. So for such directed credits are supposed to be added back to our cash book balance. Then we also remove the directed debits. What are directed debits? These are transactions we incur, expenses we incur in the bank. For example, the bank charges, the account management fees, the ledger fees, all that. Such transactions or such expenses are directly debited in the bank, but we rarely the debit or we rarely affect the same in the system, because we don't know at that point. You may make a transaction and you don't know how much money was deducted on that transaction in terms of bank charge, how much was the tax. So when we want to know how much is the adjusted cash book balance, we have to first of all get the cash book balance of the bank room, and we adjust for these ones, the directed debits and the direct credits. What we get at that point is what we call the adjusted cash book balance. So we go ahead to add on the unpresented checks. What are they? These are checks that you've paid to people, but you have not yet taken them to banks to effect a payment. For example, if I pay for furniture today, and the person I've paid has not directly taken the check straightforward to the bank, and the bank does this payment, or has taken, but maybe the bank takes a day or 2 days to do the transfer, it implies the bank will have higher balances than what I have, because me, I've already reduced a payment, but for them they have not yet reduced. Therefore, for such unrepresented checks, they are supposed to be adjusted for. Then we less or we remove what we call uncredited checks. These are checks, oh, this is money we receive from our debtors or receivables, but is not yet recorded in the system. Suppose I receive money today and I'm reconciling today, and this money is not yet reflected in the bank, in my account. It implies this money is in there, the person has paid and the bank has received, and me, I'm not yet notified. It means my cash book will not have this balance. It means my cash book will be less by a certain figure. Therefore, we also come and remove this one. At the end of that day, what we shall have at that point will be matching the bank balances we have. There is something I need to tell you. When we talk about debiting in the bank language, it means removing, it means paying. When we say credit in the banking language, it means receiving or adding. Therefore, when I say on the credit side of the bank, it will mean instead the debit side of the cash book. It is the opposite. So if I say on the debit side of the cash book, now I'll be meaning the credit side of the bank. That is the difference in there. So I have a simple formula on how we can easily recall this, on how we can easily recall the process or the reconciliation process. One, I have a statement saying, can Alice directly debit, credit, unrepresented, unchecked or uncredited checks alone? Can Alice directly credit or debit unrepresented or uncredited checks alone? The beginning, actually, each dig that says each word has been highlighted, and that's where my interest is. For example, the C from Wadican looks at the cash book balance. That's where we start from. Then the F from Alice says adjust for errors in the cash book. Remember, we always make errors, knowingly or unknowingly. So that's why we have to first adjust for these errors before we go any further. For example, you might have done an error of principle. You might have done an error where you're supposed to debit, you instead credited. Where it was supposed to be an expense, you instead put it under assets. So before we go any further, we first adjust for such errors. Then you see where we say direct credits. Add all these direct credits, all money received in the bank in terms of interest, commission, all that. Also add it. Then you remove direct debits in case of transactions like bank charges. Remove tax in case of account management fees. All that, remove it. At that point, what we will have is what you call an adjusted cash book balance. Then go ahead to add the unrepresented checks and remove uncredited checks. What we will have at that point is what we call the bank balance. It will be the same. When you look at the two, it will be the same. But this is a point to note. If you're to reconcile a bank and cash book, make sure your opening balances are updated. Otherwise, if you update now, for example, if you reconcile for this month, yet last month is not reconciled, it means you're carrying forward wrong balances. Chances are higher that even this month may not reconcile, may not balance. So, opening balances is a key point here. Make sure your opening balances are updated, are matching the ones you have in the bank, match those ones you have in the cash book before you start reconciling. If they don't match, first go back to reconcile previous periods before you reconcile the current period. Thank you so much. Next time we shall have to look at the memoranda account. What happens if I have to reconcile Uganda shillings with US dollar? What will happen if I have different currencies, yet I'm supposed to reconcile? every month. So we shall have a memorandum account the next time, and you will see how do we reconcile different currencies. Thank you so much.